Welcome to Cherry Bekaert's Professional Services Podcast. I'm Scott Duda, leader of our Professional Services Industry Group. Today we're continuing our discussion around the 179D tax deduction for A&E firms, focusing on Form 7205. This form was released on February 21st of this year and is now required when applying for the Section 179D Energy Efficient Commercial Buildings Deduction. I'm joined today by Ron Wainwright to deep dive into this topic. Ron, can you introduce yourself and provide a little more background around this Form 7205 and how it benefits A&E firms?
Thank you, Scott. My name is Ron Wainwright. I'm a strategic tax partner with Cherry Bekaert with Scott in Raleigh, North Carolina, and I lead our energy and our cost segregation practice for the firm. So thank you for joining us today with respect to this podcast and when we're going to go through and cover 179 Cap D and the new, as Scott commented, released Form 7205. So for those listeners that have heard our podcast previously, you will know that Section 179 Cap D of the Energy Policy Act of 2005 was when, and it was signed by George Bush, the second Bush, and it created what is referred to as a energy efficient commercial building tax deduction, often referred to as Section 179 Cap D. And it provides a tax deduction for energy efficient commercial building property that ultimately the taxpayer placed in service after December 31st of 2005 and now is made permanent in the statute, specifically, as we'll talk today about Form 7205 and the Inflation Reduction Act of 2022.
So Ron, what type of investments in real estate are eligible for this 179D benefit? And how does the Inflation Reduction Act change any eligibility for these A&E firms?
Great question, Scott. So as mentioned, the 179 Cap D deduction was again enacted to encourage taxpayers to make buildings more energy efficient, specifically commercial buildings, or what's referred to as energy efficient commercial building property. And it occurs when constructing a new or improving an existing commercial or governmental owned building. And that also includes taxpayers who own or lease a commercial building, which is allowing them to deduct the cost or a portion of the cost to install what is referred to as energy efficient commercial building property. As mentioned, the Inflation Reduction Act of 2022, which was signed on August 16th of 2022 by President Biden, really begins to expand and significantly changes 179 Cap D. So historically, 179 Cap D was a 0 to 60 cents energy efficiency deduction that a taxpayer was entitled to that ultimately was attributable to what they had either constructed or had constructed or renovated with respect to it. So the first thing the Inflation Reduction Act does specifically with respect to architectural and engineering firms is it expands the list of eligible buildings to tax-exempt entities can also claim and allocate a section of that 179 Cap D deduction to a designer. But probably the largest change was in the modeling standards and the methodology, where that 0 to 60 cents per square foot now is changed. But most importantly, the energy efficiency cost savings is reduced from 50 to 25%. And now we're looking at it beginning at 50 cents, going up to $1 per square foot. And then to the extent other requirements are met, it's $5 per square foot. So the recognition of that in regards to 179 Cap D is it really moves from $1.80 a square foot, that's 60 cents per building area, all the way up now to $5 a square foot. So a significant opportunity with respect to either a developer and or more importantly to A&E firms who can receive the 179 Cap D allocation, now specifically in the tax exempt area.
So Ron, you mentioned the technical requirements. Getting into the details a little bit here, what are some of the technical requirements under 179D to meet these energy efficient benefits? And then how did this change under the Inflation Reduction Act?
The great question. So again, really it's all about the changes that occurred to the modeling standards and the methodology. So first is there really is an elimination of what was referred to as the partial allowance. So building systems, as in old law, can no longer be modeled separately. So we're really modeling the entire asset or the entire building. There's also no provision for what was referred to as the interim lighting analysis. So in essence, it removes the ability for a taxpayer or an A&E firm receiving that deduction attributable to parking garages. And that was a significant change. As mentioned, the energy cost savings to qualify under old law was 50%. And now that has been reduced to 25%. And the square footage, really, when you think about the analysis, is really more from a 50 to $1 per square foot, moving all the way up to $5 a square foot. And I'll talk about the why there in a few minutes. But to make sure that our listeners understand, there's also what's referred to as this new standard called prevailing wage and apprenticeship requirements. And so what does that mean? It means to qualify for that maximum benefit of $5 per square foot on the energy efficiency. The construction project must have paid prevailing wages, and also their individuals in the construction project must have be on a conducted apprenticeship program. And that is a requirement that must be documented to meet the $5 per square foot. As well as there's new forms around the allocating entity must confirm and document and substantiate that. The good news when we get into the technical detail is there is not an update to what was referred to as the ASHRA standard 90.1. So most recently, the approved standard for really 4 years prior to being placed in service was always 90.1 2007. And that is contained in the Inflation Reduction Act as well. I think it's important to note that the responsibilities on either the developer or the entity that is going to be allocating really kind of falls into three major buckets. First of all, review and sign a correctly formatted allocation statement. And that has to be prepared and provided by the taxpayer, or more importantly, an outside third party, which is a requirement of 179 Cap D. You cannot self-certify the energy efficiency. It must be done by a third party or an independent party, and that's where Jerry Bekaert comes and is involved. So the other thing is to accommodate what's often referred to as non-evasive facility inspection, which means that third party, Jerry Bekaert in this instant, has performed a third-party analysis and includes the review of the work that was ultimately performed. It includes an inspection, which includes HVAC, interior lighting, envelope systems of the building, et cetera, because you're no longer modeling a specific area of the building, you're modeling the entire building. So it's very important to understand these changes have significant implications to 179 Cap D as we go forward effective January 1 of 23. But the good news is the energy efficiency was lowered to 25%, no longer 50%, so you don't have to exceed a 50% level, only 25%. And now a taxpayer and or an entity that allocates to an A&E firm can allocate up to $5 per square foot. So a significant increase from the $1.80.
So I believe the newly released form, the form 7205, is that transfer of deduction document. And can you talk to us a little bit about the background of that and its effective date for the 2022 tax filings?
Great question, Scott. So one of the things that our listeners, if you've attended our podcast, we've done or completed a podcast on what's referred to as the 179 Cap D audit technique guideline, which was released in June of 22. And so clearly the Internal Revenue Service, knowing and recognizing the magnitude of tax savings occurring with the energy efficiency deduction, intentional tax savings that was placed in the statute, as we talked about, underneath the Energy Policy Act of 2005, We now have this new IRS Form 7205, which is, by the way, a required filing for the 22 taxable year. So even though it was issued, as you indicated, Scott, on February 21st of 23, it is a requirement that taxpayers, and that includes a architectural and engineer firm or a contractor who's received an allocation, to complete that form in their tax filing. And so ultimately, this came about attributable to the audit technique guideline, where the IRS had concerns and began to scrutinize what was occurring from really 2005 forward. And so that's kind of the background of the form. It really is to begin to strengthen the compliance requirements attributable to the energy efficiency deduction. And a simple example is if I had a 100,000 square foot building and it modeled out where I met the greater than 50% energy savings, I would receive a deduction of $180,000, $1.80 per gross square foot. Now you take that same building, 100,000 square feet, and I meet the new standards. I'm compliant. So 50 became 25%. And then, of course, the ASHRAE 90.1 2007 stayed the same. But I have the prevailing wage and apprenticeship requirements that are required, and I'm now modeling the entire building from an energy efficiency perspective. That deduction goes to $500,000 as opposed to $180,000. So the form from a perspective is really a follow-on with respect to likely some of the findings they were finding in IRS examinations, as well as the audit technique guideline that was released in June of last year, which became a lot more serious in the scrutiny the IRS was going to apply to these energy efficiency deductions.
Great. So as we get into the details of the form a little bit, what specifically does the form require in order to transfer this deduction?
That's a great question. So the new Form 7205 is really broken into 4 sections. Section 1 is what is referred to as building an energy efficient commercial building property. I mentioned that EECBP and the information. So really what the building owner or the primary designer is required to provide is information about the building, such as the address and the place and service date of the EECBP property. And this section also requires potential energy savings based on the square footage and the ECBP type that was either renovated or being constructed in the building. That's just section 1. Then we move on to section 2, where it requires information so as to calculate the maximum allowable deduction according to what's referred to as the lesser of the cost of the energy efficient commercial building property, or the EECBP, and the allocation or claim section 179 cap deduction pursuant to the notice of 2006-52. So a lot of granularity there in the engineering side. Then section 3 of the Form 7205 is what's referred to as the certificate of information. And this goes back to my comment about being a third party, in essence, consultant, but more importantly, an energy certifier with respect to the energy efficiency of the building. And building owners and primary designers are required to list now the contact information of that third-party company, which was retained and completed the Section 179 calculation. And this is pursuant to an IRS Notice 2006-52, really dating back in time. But you see they're really strengthening the scrutiny that they're applying. And then finally, Section 4 is what's referred to as the designer allocation information. And this section really deals with the primary designers who have received the Section 179 Cap D allocation from a governmental entity. And so this is going to impact our A&E firms and our contractors or subcontractors that actually were the technical designer of the energy efficiency systems. And so from the governmental entities, this is a new requirement, so as to provide the contact information of all the authorized signers of their allocations. And this is pursuant to a notice in 2008-40. So you can see that this Form 7205 is really a follow on as I commented to the 179 Cap D audit technique guideline. Never had an audit technique guideline in 179 Cap D before. Service issues in June of 22. The Inflation Reduction Act occurs in August of 22. And now we have this new Form 7205 because of the increase in the energy efficiency deduction, which is being obviously pursuant to the Inflation Reduction Act. The other thing I would mention around, there are some additional requirements to Form 7205 or to the Section 179 Cat D. So in addition to completing the Form 7205, taxpayers must also provide a report from a qualified independent third party who has conducted an energy efficiency analysis of the building. And this has to be based on the guidelines established by the Department of Energy and must also include information such as the energy efficiency improvements made to the building, the energy savings that were achieved, and most importantly, the methodology that was used to calculate the energy savings. So as you can see, this new Form 72 is really a paradigm shift with respect to the compliance surrounding Form 7205. Now, most taxpayers have all of this information available to them underneath EPACT. However, now I will say the Form 7205 brings it all together and is a required filing within your 22 tax return and further taxable years. And I think it's really about making sure that the law is being followed, specifically in the third party perspective. And I think it's a good thing overall.
Great. So, Ron, I know we published an article on the IRS audit technique outline on this 179D. Can you talk a little bit about the major issues we discussed there, how it's going to impact taxpayers claiming this deduction, and maybe how this new form will be utilized?
Well, it's an excellent question. And so, yes, we did a podcast on the audit technique guideline, which is extremely expansive when you think about the ATG that occurred in regards to 179 Cap D. And really what I think the Form 7205 and then the audit technique guideline really wanted to do was to ensure that the ATG or the audit technique guideline was being followed in regards to the energy certifications. So what you see in the Form 7205 is not an identical mirror image because the audit technique guideline is rather expansive, but it does capture in those four elements that I discussed, how the form is broken down, the audit technique guideline requirements. And I think what will ultimately happen is that in the event that you are examined, and there is an expectation that because of the $5 a square foot, my example, the $500,000 tax deduction versus $180,000, that this is an area that because it's permanent in the statute underneath the Inflation Reduction Act at $5 a square foot through the 2032 timetable. I think what you'll see is really they are going to compare the Form 7205 with the audit technique guideline and in the context of an examination and to see if you really represented what you were doing correctly. Remember that there's a lot in there with respect to the energy savings percentage requirements for what is referred to as each qualifying system. Remember, we're modeling the entire building now, but we get into HVAC and hot water, interior lighting, the building envelopes, really any type of mechanical or electrical system in the building. There's also in the ATG some recognition of, well, did this taxpayer claim the 179 Cap D in prior years? And then ultimately what they're really after is looking at the efficient commercial building property and modeling the cost of the energy efficiency attributable to those Department of Energy requirements. So again, the qualification, the certification must be done by a third party. That's where Cherry Bekaert becomes involved. And then ultimately the building owner is only after that certification has occurred, really becomes what's referred to as the authorized representative who executed the allocation letter. And I think what they found in the examinations, and I would say that we have been examined, and I'm proud to say that we have never had an adjustment in any and all of our work. But I think what they found was that there was allocation letters that were being completed, and it was not by the authorized individual that had the ability to transfer the deduction and or, in fairness, claim the deduction. They were not meeting those energy efficiency standards. So I think this is kind of a bookend. Audit technique guideline, June of 22, Form 7205, obviously in February of 2023.
Okay. Ron, in closing, any thoughts on where A&E firms should be focusing as we look through the rest of 2023?
I do. We are working significantly with our clients in regard to specifically the new requirements to achieve that $5 a square foot and the documentation and the substantiation that's required in regards to, as I mentioned, the prevailing wage and apprenticeship programs. This is honestly where the service has not given us a tremendous amount of guidance. But I also think we are finding that to qualify for that maximum benefit, the construction project really needs to appropriately account for the information that's required to document and substantiate that you have met and exceeded the prevailing wage. And what I mean by that is that if I'm an A&E firm and I'm receiving that allocation, I need to have a representation with respect to that allocation by job type, by job level within the construction of that building, that every prevailing wage was met. And prevailing wages differ by the type of job on a construction site. And so that's where we're working with our clients, and where I think A&E firms need to be very attentive, is to ensure that you just don't automatically assume it's a $5 per square foot transfer because that asset was placed in service in 2023. Recognizing that the Inflation Reduction Act was signed in August of 22 and created a lot new rules. Well, A&E firms probably were designing buildings in 21 and 22, as well as buildings were being constructed in 21 and 22 that ultimately fall into the taxable year of 2023 and are eligible for that $5 a square foot. Significant tax savings, but a lot of documentation requirements, certainly in the prevailing wage. Further, when you think about the apprenticeship programs, it is unlikely, but even though there is kind of this phased-in approach, that the construction or the building general contractor was taking into consideration in their employee count specifically how many individuals were actually within an apprenticeship program. So the good news is there's some safe harbors in there. That's where we're working with our A&E firms as well to make sure that they understand the safe harbors, maximize those safe harbors so they receive that full energy efficiency deduction. And then we're also spending a fair amount of time, and A&E firms really need to pay attention to this, because one of the things, as I mentioned, the Inflation Reduction Act did was really the expansion of the buildings was substantial. So when you think about tax exempt entities now, churches, charity hospitals, private schools, public schools, tribal lands, all of that are eligible now, historically not, effective January 1 of 2023, to receive that maximum energy efficiency deduction of $5 a square foot. So really A&E firms need to be thinking over the horizon as well as in the rearview mirror from a strategic tax standpoint to make sure that they get the maximum benefit available to them.
Great. So thanks, Ron, for joining us today and talking about this Form 7205 for A&E firms. Certainly a valuable deduction, but some effort to obtain that deduction for sure. Also want to thank our listeners for joining us today. Ask that you please subscribe to our podcast and our other professional services communications to stay up to date on hot topics such as this, impacting both the A&E industry as well as all professional service firms. Appreciate your time today. Thanks.